Okay. Gen X, trader dad. I like that. Okay. Very good, Xavier. Well, hopefully, Jess, hopefully we get a good one. But let me go ahead and let's get into the data sheet. First and foremost, I do have an indicator for this method that makes it a little easier. I have, thanks to Azani, have made some updates to the indicator. Link to that indicator is in the description of this video or in the message that's pinned above. It's free, but you just have to click on the link. You can't search for it because every time I try to publish it open, TradingView says, oh, it's not unique enough. So they take it down. So I have to keep it private, but it's free. You just have to use the link to get to it. So definitely want to download that if you haven't already, so you can go ahead and put it on your charts. That is one of the things we use here. So how's my audio? Does my audio seem low to everybody or is it good? Is it good for everyone? Okay, good. It's a little low on my meters over here. That's why I was making sure. I know I can get loud, especially if we all pass, and I don't want to clip my audio. So first timer, a little low. Let me bump it up just a little bit. I don't want to get it too loud. Let's see. How's that? Is that a little louder for everybody? No, that's too much. Hold on. We'll go right there. Yeah, that should be good. Okay. All right. So let's get into it. Obviously, everybody should, if they don't already have a data sheet downloaded, they should have one downloaded. The way you get access to the data sheet, this is an exclusive benefit of being either a member of the Unicorn University or the Market Lens. As of right now, that is an exclusive benefit to those two communities. And so if you want access to this data sheet, links to both of those communities are in this description of the video, and you can go ahead and download the sheet from there. Here is the sheet. So there's been some changes to the sheet, and I'll explain what they are. So going into this, number one, if you've joined before, and especially my last one, I never expected this to blow up the way it has. This was something that I used myself and thought it was great. And I would straddle the market. I've straddled the market for a long time, long before I ever did this. I mean, back in the early 2000s when I first started day trading, I straddled the market via options on earnings. I still do that. And so I never thought about doing it until earlier this year and said, hey, well, maybe I can pass some evals rapidly this way. And it has blown up thanks to Ash and the Unicorn University putting me on as a student stage video. And then it all just went crazy after that. So what I do is I said, can we come up with a statistical edge as of to where we need to place our orders? Because anybody can straddle a market, right? Just put a sell stop above and below the market. But where and why? Some people would put it at a swing point. Maybe there's liquidity above or below, put it as a swing point. And so there was really no real rhyme or reason where we're going to be putting our orders. So I said, okay, well, can I come up with a statistical edge? And so then I started to go over these news events and look at how far price moved right when the news would open, whether it would manipulate up, manipulate down, and then how far the price would actually move after that. So then I just real simple, I would take the first 5-minute candle and I would say, okay, well, if it was an up close candle, I would measure the manipulation as the open low. And then the actual move of the candle was open high, right, to the highest point. And I just ran with that. And it's worked great. I have passed 13 accounts now this way, and countless hundreds of others have passed accounts this way. But there was times where certain people would pass and then others would fail in the same event doing the exact same thing. And obviously we can't control all of that, because you got to understand, guys, if you're using TradingView and you're using a prop firm account that you're logged into TradingView, and then you're using a trade copier on top of that, there's a lot of routing that has to happen in order for orders to actually be processed. So when we're talking milliseconds and you're logged into a Tradeovate or another account through TradingView, you place your order in TradingView, it has to go through TradingView, then through Tradeovate, then hit the CME and then come back. So there's a round robin. So there's going to be times where some people pass and others don't, right? That's just, unfortunately, that's just the nature of the game. You're going to get slippage, which means your TP order will be there, but then it hits it, but because it hits it so quickly and comes back on us so quickly that it doesn't execute, it doesn't have time to execute. So maybe you'll get slipped in the negative or you'll get slipped in the positive. So these are things out of our control. There's nothing we can do about that, right? That's just how it works. However, after doing this for many, many months and helping many, many people pass, and some have failed as well. I have failed myself at this method. That's how it is. I started to look at the data on a more granular level. And I said, okay, well, now doing this so many times, really after the first 5 seconds, it doesn't really matter. Because if you're going to pass, you're going to pass in the first 5 seconds or so, maybe 10 seconds. More likely, it's like 2 or 3 seconds. And if you're going to fail, it's going to fail in the first 2 or 3 seconds. So why am I measuring the first 5-minute candle? Right? So in my head, I'm going, maybe I shouldn't measure the first 5-minute candle. So, yeah, we did do an update on the indicator. I do the pad in terms of points. You'll notice now that there's points, ticks, and pips. And that's if you wanted to try to attempt this on different assets. Like if you wanted to do oil, you want to do it in ticks. If you're going to do it on the euro, you're going to do it in pips. If you're going to do it on the indices, you're going to do it in points. So that's why there's been a little update. Again, thanks to Azani. Shout out to Azani. I don't know if he's on the stream. We've updated the indicator for that. So essentially what I've done is I've went down and I've redone the news data. I have also have eliminated some news data. I used to have going back almost 2 years on the news data, but I felt with going back that far, some of the older data was irrelevant just because of the indice. Like for example, a 50-point move on NASDAQ from 2 years ago when the NASDAQ was at 17,000 is not going to be the same as a 50-point move on the NASDAQ now when it's at almost 22,000. So that how far price moved then was kind of irrelevant to me. So what I did was I deleted some of the older data, and I'm now just tracking basically the last 12 events. So I think that's more relevant to what type of market we currently have right now, as opposed to going back even further. So that's the first change I did. The second change I did was on the charts, and we'll go ahead and let's use some examples. Let's go to, let's see here. Let's look at the last NFP would be a good example. I know I had plenty of examples, but I don't remember them now. But let's go to the third. Put my 830 on. Yeah, I don't think NFP was on the third last. I think it was a different date. I think it was the next, I believe it was the 10th. Let's see. Yeah, it was the 10th. All right. There we go. All right. So here's your first 5-minute candle. So what I did was I said, okay, well, let's look at the first 5 minute. Obviously, that looks really good. Let's go down to the first 1 minute. It tells a different story. So if we're looking at the first 5 minute, you're like, oh, really good, straight down. We go down to a 1 minute, and then we have some retracement here. This, again, depending on how far this goes, this retracement, especially if you're using a trailing drawdown prop firm, which most of them are, if it hasn't already hit your TP, this right here could blow the account, literally just because this is enough of a drawdown to blow an account. So then what I would do is I go down to a 1 minute, and then from the 1 minute, I'd go down to the 5 second. Now, I know not everybody's trading a view is going to be able to actually go down to the 5 second, or even for that matter, down to the 1 second. So we'll go down to the 1 second. And then we get a real picture of what happens. So what I then did was, instead of measuring the whole first 5-minute candle, I really just measure the first 5 seconds. And then if in that first 5 seconds, I see a big wick up, like a down and then a wick up, I'll go down even further and go down to a 1 second chart. And as soon as I see a move down or up, and then any type of retracement back, like more than 10 or 15 points, that's where I would stop the measurement, because if it retraces that far back, it's going to blow the account. So what this has done is it's allowed me to get on a much granular level to get more accurate on the data sheets to really give us a true passing percentage. Has it changed the data much? Has it changed the pad much? It's changed it, in my opinion, for the better. So if we're looking at some of the older sheets here, 1 second. So we look at NFP here. Let's go to NFP. What it has changed is your manipulation average and the average move, right? So this is what the old one was. So like here, there's a great example. So last month on the first 5-minute, it was 251 points because you're measuring the first 5-minute candle. Well, really, that move actually only moved 151 points. And I could go over and over. A lot of these have changed because, once again, I don't care now what happens to the first 5 minutes. We want to know what happens in the first few seconds. So that's what has happened with this pad. Now, I understand some of you guys have this. You might have been in one of those communities. You downloaded the pad and you no longer are in those communities. And this is going to be a one-time thing, guys. I'm not going to give you access to the pad, but what I'm going to do is I'm going to let you guys grab this data. The other thing I've added to the spreadsheet was this no trade. And so if after the first 5 or 10 seconds, maybe 15 seconds or so, we don't get any movement to trigger or a trade, I personally close out. There's no need to keep going. So that's what this measures. So essentially, if either the move or the manipulation is less than the actual pad size, then it never triggered a trade. So now we have a no trade that filters out here, and that does not calculate into the passing or failing percentage, because it was a no trade. So I've added that as well. So Johnny, I'll get to that in just a second. So let me just do this, guys. So everyone who is in here who has the data sheet that may no longer have access, if you still have access to either Unicorn University or the Market Lens, again, in my journals, you can go and download the newest spreadsheet. It's new data 3.1. That's the one you want. But here is CPI. Go ahead and take a screenshot of that so you can fill yours out. Here's NFP, FOMC, and then PPI. And after that, PPI is pretty bad. The passing percentage is pretty horrible. So there you go. So today I'm rolling with a 24-point pad. And let's get into the actual charts. Hold on. Let me, forgot to log in. Give me just a second. I got to log in here, and then I'll show you guys how we actually place the orders. One second. Okay. All right, we're logged back in. Sorry about that. Okay. So first and foremost, what is it that we're doing? We are straddling the market because we don't know which way the news event is going to go. Okay. We don't know if it's going to go up. We don't know if it's going to go down. It could go up and go down, or go down and then go up. So what we're doing is we're going to straddle the market to try to take advantage of the move regardless of which way it goes. And we're going to use this pad here, which is the OSOK indicator pad, which I linked it in the description and in the pinned messages. So you can download, and that puts these lines on the screen. And because this is where we're going to place our orders. And so in the settings of it, you want to in points if you're using NQ. And you're going to want a 24. I found a 24-point pad to be the highest passing percentage at this point in time. And yes, that does 24 points above and below the market. And what we do is we're going to be placing stop orders. We don't place limit orders or market orders, because if you try to sell below the market, you want to go short on something, and you place a limit or a market order, it's automatically going to execute your order because you're below price. Same if you're above price. If you're trying to buy with a limit or market order above price, it's going to immediately execute your order. So what we do is on our charts, when we're logged into our accounts, we're going to somewhere way away from price at the current time, we're going to right click on our mouse. We're going to go to trade. We're going to go create new order. I personally, and so we're going to sell. We're below market. We're going to place a stop sell order. I'm using a 250K Apex account, so I'm going to use the max allocation of contracts that I'm allowed to use, which is 27. So you have to look at your prop firm that you're using, and you have to see the type of account you have. What is the max allocation of number of contracts that you're allowed to use? So in my example, it's 27 for Apex. And give me just 1 second. Sorry about that. So 27 contracts, my take profit goal is 15,000, but because of slippage, I try to go a little bit past. So I'm going to go 16,000, which it's going to default to just a little underneath that. Then I'm going to hit sell. So I'm going to hit sell when we're below price here. And then what I'm going to do is go above price, and we're going to do the same thing, but we're going to do it in the form of a buy stop order. So once again, right click on my mouse, hit create new. I'm going to go to a buy stop order, 27 contracts, and then I'm going to hit buy. So for right now, all we're doing is we're just waiting for price to get closer to the news event, which is at 8:30. So we have a little bit of ways to go, but that's how you would actually place the orders on your charts. Does anybody have any questions about how to place those orders? Nope, no questions. Okay, very good. So everyone understands how to place the orders. Now, in the past, what I've done is I've waited for 10 seconds before to move our orders to the actual pad itself. I'm going to wait for 5 seconds. I know that's kind of quick, but I'm going to wait for it, because what happens is the pad here isn't going to be based off of whenever we move our orders to it. So I want to be as close to that news drop at 8:30 as possible. So I'm going to use the last 5 seconds. So once I see 5 seconds over here on the actual countdown, once we're at 8:25, I'm then going to move my orders. So that'd be that. Does anybody have any questions regarding the pad, how to use the pad, or what the pad is? Hopefully the market makers give us a good one. We've had some good. FOMC was not all that great, but the last few NFP, CPI, PPI, they've actually been very good, and a lot of people have passed. So we'll see what happens. To the psychology side of this, as you guys have heard me say many, many times, this is a gamble. Even though we have all this news data and we have a pad and we have everything else, and it says 82% passing, this doesn't guarantee 24 J-Reba, if you're using Apex. Um, doesn't mean it's going to happen, right? Just because we have this data does not mean it's going to do exactly like it's done for the last 12 events. So I only do this on cheap Apex accounts. I think I just bought this one. Actually, it was a little bit more. I think it was $60. Usually I don't pay more than 35 for the evals. Most of mine have been $18. But this is only for passing evals. This is not a trading model. In fact, most funded companies don't even allow you to trade news. So that's the important part. If you cannot withstand the cost of an eval and taking that cost and lighting it on fire and not having a problem with that, then you don't want to employ this method. If you're new to trading and you don't have a trading model yet, learn a trading model. The Unicorn University and the Unicorn and Ash and Matt is a fantastic place to learn a trading model. The Market Lens that has AM trades and T trades in there, they both have their own models. A fantastic place to go learn. So if you don't have a trading model, don't do this. Sure, we can get you passed on an eval, but then what are you going to do after you pass the eval? Probably going to wind up blowing it. So if you're new and you're interested in seeing how this works, just observe. If you have a trading model and you want to rapidly pass evals, then employ this and flip the switch. Go right back to being patient and disciplined and having proper risk management. The whole point of this is that prop firms don't make money on successful traders. Prop firms make money on traders that buy evals and either fail them all the time or take months and months to pass an eval. This account is a great example. The profit target's $15,000. They only give you $6,500 in drawdown. I don't care that it's a $250K account. The fact that it's a $250K account should mean nothing to you, because when you're trading prop firms, we're not trading the balance of the account. You're trading what you have as drawdown, because that's how much you can risk. So if you're trying to pass $15,000 with only $6,500 in drawdown, and you're risking probably, like, for example, I risk only 5% when I trade my model of whatever my trailing drawdown is. Well, risking only 5% of $600 or $6,500 is only $325. You know how many trades you're going to have to take to reach a $15,000 profit if you're only risking that? That's why we employ this as a one shot, one kill, because you're able to use the full $6,500 drawdown in one shot. You're going to have a better chance of passing an eval doing that, as opposed to using small risk and trying to pass $15,000 with only a $6,500 drawdown, or your actual risked amount, which, $350 or $700 or even $1,000. So that's why I use the 250K Apex accounts, and why it's very important that this is only for passing evals. And that's the only time we should employ this. And in fact, if you have a funded account and you employ this, you're probably going to breach your account. They're going to deny your payout if you try to get it. So yeah, the last NFP was clean. And yeah, so for the pad, as far as NFP for Apex accounts, it's 24 points. In fact, 23. Yeah, 23 and 24, I believe, are the same. I think 25, it drops down. Yeah, so 23 or 24. I like to go just with a little bit more, just to give yourself a little bit more of a cushion. So again, if you're using that. Now, here's the other side of that. There's some other events like FOMC that doesn't have as good a passing rate. It's 50% with that current pad. Well, what if you don't try to pass it all in one shot? What if you just try to go for half of your account in one shot and go, say, 7,500? Well, that changes the passing percentage. Let's say you wanted to go to 5,000. That stays the same. So you don't always have to do all of it in one shot, right? I personally do. But when you download this sheet, you can play around with the numbers to see what's going to work the best. The other update to the sheet is I've added a drop down, whether it's NQ or ES. Honestly, there's really no point to do this on anything other than NQ as far as the indices are concerned. Some might want to try ES, but I just put it in there because some people have asked for it. But now it's a drop down as opposed to having to put in the dollar amount per point. So that's another update we've done to the pad. Yeah, and everybody, if you want link to the indicator, it's either in the description of the video or it's at the pinned message at the top of this chat. So if you're in the chat, just go to the pinned message at the pad. Yes, it does, Max. It depends. The pad is all based on the type of account that you have and how many contracts you can allocate to doing this. I believe in my funded futures, I think a 50K account, you can only allocate 3 contracts, if I'm correct. Anybody else? I don't use my funded futures. So anyone who does use my funded futures you can confirm that. And I think the passing profit is 3,000. Is that what it is? I think that's what it is. Is that right? Anybody? 4 for 50K. I don't know, 5. I don't know. I'm getting different. Okay, Marco. Yeah. 5 contracts and it's 3 grand. Wow, I'm getting on Apex. I got you. So you that's the whole reason why you download the data sheet. You put in the max number of contracts that you have with that account and then what the passing value is that you need, and then that's going to change all these numbers for you. So, for me, I use a 250K Apex account. It's 27 contracts. It's 15,000 passing. And that gives me my passing percentage right there. So we're going to go back to NFP. And so here's your NFP. So, all right, guys. So we got about 2 minutes left. So again, everybody should already have the orders on their screen, sitting and waiting. And we're going to wait till it gets about 5 seconds. And the way you move the orders is you're going to hold the shift button down first and then go to the sell stop bracket. And then you're literally going to just drag the order up and then you let go. I'm not doing it yet, but that's how you would move your orders is hold the shift, go to the bracket, and then just drag it and it will move it all at one shot. Yep. We'll see here. All right, about a minute left, guys and girls. And if we do fail, we move about our day, guys. We don't harp on it. We know what the risk was, and we go back to our normal trading model and we look for our next opportunity. I'm just moving mine a little bit closer so I don't have to move it as far once the 5 seconds drops. Okay, moving my orders. There we go. Close out the other side. I don't know if we pass or not. It went up. I don't know if it closed me out. Yeah, it didn't close me out. I got slipped all the way back to blowing the account. Yeah, only some probably passed. Yep. Let's go look what happened on mine here. Let's see what happened. Yep. So this is a great example where it went and it hit take profit, but I got slipped. So I did not get profit. What about anybody else? How did everyone else do? Yep. Slip, pass 300K. Okay. Passed, slip, passed. Yep. So this is a great example of $100 short. Okay. Good job. Good job. Yep. So mine went up 28,000 into profit and it never executed. Passed. Good job, guys. Had a couple slip. Yep. Pass on 150. It's a mix of both. NFP and CPI are both kind of the same. I think CPI has a little less manipulation. I have to look. See, what I could have done is I didn't know if it had executed and it was just frozen or not. I could have just closed out when I was up, but I didn't. So, is what it is. Now let's go down to the 1 second chart. Let's see what happened. Let's go down to the 1 second and let's actually see, or let's go to 5 second. Let's actually see what happened. So this is a great example. So it went up, but then it came back so fast that it didn't even get a chance to fill. So let's go down to the 1 second. Here we go. Yep. So there's the move up, and then immediately you move down and move up again and then down. So by this point, it was too late. I could have probably, like I said, manually closed out, but it is what it is. But congratulations to everyone that did pass. 19,600 out of 20K, looking good. Yep, yep. Just trade one slip. Past two 50K accounts. Good job. Did you use a trade copier? Thanks, Tom. I appreciate that. Yeah. That's what we get sometimes. That's okay. It is what it is. Passed one, failed one, copy trade issue. Yeah. Copy trade, I've never had any success using copy traders. I know there are many that have, depending on the type of trade copier. I know a few of the guys I know have started using a VPS that's located in Chicago, and because of that, they have noticed that they have almost zero slippage because they're closer to the actual exchange, the server that they're on, instead of their current internet. So even in your own trading after this, there is still can be slippage on using a copy trader or trade copier, and using a VPS located in Chicago can help that. Yeah, it's probably, so I have tested many different. I've tested 9:30 a.m. OSOKs. I've tested oil inventory OSOKs. I've tested Jolts OSOKs. So my winning percentage has been skewed a little bit because of that, because I'm testing other ones. But what I have can say is that out of like straight up NFP or CPI or PPI, I'm 13 of 18. So that's pretty good doing that. So yeah. No, you don't. So Peter, you used to have instant order placement on. I don't know what version of TradingView you have now, but TradingView is updated to where you don't have to have it on anymore. If you have an older version of TradingView, maybe you do. But they have updated that. It used to be you had to have instant order placement on, and then when you were done, you wanted to turn instant order placement off. But so it just depends on the version of TradingView that you have. I don't have to. The one I have, we don't have to do that anymore. So, is there any other questions that anybody has about the method here? Nikki, to use it for CL would be like on oil inventories. Oil inventories have been kind of crap. They're not as very predictable. And in fact, the last few oil inventories, price just hasn't done anything. So thank you, Ash. Most welcome. Thank you, Jimmy. Let's take a look, Roger. Let's take a look. So realistically, I'm only going to measure this first 5-second candle. And realistically, I might actually go down to the 1 second to see. But let's do this. Let's replay back to 5 seconds before. And what we have to do is we have to put some parallel bars on the chart because this is going to show us where we're actually going to trigger it, right? So if we go in here, there's your trigger. So we measure from here up. And so from there to the highest point, about 51 points, which depending on the account, you should have passed, but because it happened so fast, it didn't. Let's go down to the 1 second chart. Yeah, realistically, it's this. It's the first 1 second right here. So let's measure from here to there. So we only got 32 points. That's why. Yep, that's why. Oh, Azani himself. Everyone give a big shout out to Azani for updating the OSOK indicator. He's the one that helped me update, make the changes to it. Yes, I'll be going live for CPI. You will see me for sure on CPI and NFPs all the time. I did an FOMC. I'm not the biggest fan of FOMC. I don't know if I'm going to continue doing FOMC streams. I will definitely always do NFP and CPI streams. But as Ash teaches, independent thinking, guys, you can try this on any news event that you're willing to risk, but try to collect some data first. Try jolts, try other ones, and see what happens. You never know. You never know what other news events might work for this. So definitely the best ones are NFP and CPI. Again, today NFP was a bit of a mixture. Some passed, some didn't. So this is what's going to happen, and this is why I, bang into you guys' head that this is a risk, no matter what data we have, and no matter what price is done before. It is a 50-50 shot, but using the pad will help us out to avoid most of the manipulations in most of the time. But it's still a 50-50 shot. So like I said, if you can't sustain the expense of what an eval costs, then don't do this method. If when you buy that eval and you're going to do this, you just have to look at it and be like, okay, that money's gone. And if you have that mentality, then you're going to be just fine. And you just move about your day. Congrats, Vincent. Congrats. Glad to hear. Yes, for the OSOK indicator, guys, it's either in the description of the video or it's a link that's pinned to the top of all the chat. You're very welcome. There you go. Imran. Yeah. Yeah, I have my instant order on. So I just leave it on. So if you guys don't have it on, you're probably going to want to just turn it on there. I always have mine on. Again, the old TradingView, you used to have to turn it off. That way you didn't do it on your next order, but you don't have to do that anymore. So I just always have it on now. So, but if no one else has any questions, I'm going to jump off. That was it for me today. I'm glad to hear that some of you guys passed. Unfortunately, not all of us did, but it is what it is. We have more opportunities. All right. Well, that is all then. I hope everyone has a great weekend. Stay safe, risk properly, and happy trading.